$17 billion in insurer assets just flipped from independent to affiliated. Annuities and reserves backing thousands of policyholders were reclassified in one filing, and a record $12.5 billion team sale followed days later. The disclosure gap now touches insurer solvency, credit ratings, and two sports empires at once. Will regulators approve a $6.5 billion asset swap to unwind the exposure? And will prosecutors turn the reclassification into charges before that Lakers deal actually closes? At the center are two life insurers controlled by businessman Mark Walter, Delaware Life Insurance Company and Clear Spring Life and Annuity Company, subsidiaries of Group 1001 under TWG Global. The question under review is whether business loans and private credit investments made to entities inside the same corporate family were properly disclosed as affiliated. The trail starts. At least $11 billion was already affiliated as of December 2024 under the new categorization. The fix is filed but not approved. Delaware Life would sell up to $6.5 billion in affiliated assets to TWG Global in exchange for unaffiliated investments, a swap that requires approval from the Delaware Department of Insurance. Clear Spring separately cut $90 million. Together, they chip away at a pool exceeding $20 billion in loans previously conceded as having undisclosed affiliated status. One loan shows how granular the unwind goes. A $4.1 million loan to Dodger Tickets LLC, an entity affiliated with Walters Baseball Holdings, was nearly paid off in April 2026, showing a $1 balance in the June filing. Against that clock came the sports liquidity move. About a week before August 20, around mid-August, Walter agreed to sell the Los Angeles Lakers for a record $12.5 billion, about 14 months after purchase when the franchise was valued at $10 billion. That is $2.5 billion above the valuation just over a year earlier, an unusually fast turnaround for a controlling sports asset. Coverage of the filings describes the sale as a quick source of cash as assets need to be moved, with proceeds available to support the asset swap and broader balance sheet repositioning if regulators require it. No buyer terms, definitive agreement details, purchase price allocation, or league approval timeline and closing schedule have been published. One filing review described it as an agreement in principle, with league, regulatory, and counterparty approvals still ahead. The same pressure extends to London. Talks reported August 18 described negotiations for Walter's 12% stake in Chelsea FC, held alongside Todd Boehly for a combined about 12.7%, to be sold to majority owner Clearlake Capital. Clearlake holds about 61.5% through Blueco 22 Holdings LP, the vehicle that acquired the club from Roman Abramovich in 2022 under a joint control arrangement. A sale of the combined stake would lift Clearlake above 87% and end joint control. No official statements from Walter, Boehly, or Clearlake have been issued, no valuation or per-share price disclosed, and no agreement is described as imminent. Federal agents executed the court-authorized Midway search in September 2025 and seized a mobile phone, with the FBI Chicago field office declining further comment. Group 101 and TWG Global say they are cooperating fully and that capital position and liquidity remain strong, while the Southern District of New York, the SEC, and the Delaware Department of Insurance have declined comment beyond ongoing review. Ratings reflect scrutiny without a downgrade yet. S&P revised outlook from stable to negative while affirming an A financial strength rating. Fitch placed the insurer on negative watch. No charges have been filed against Walter or any executive. No enforcement action, fine, or standing determination has been announced, and no leadership changes have been reported. The NAIC in 2026 restructured private credit oversight, creating an Invested Assets Task Force and Investment Analysis Working Group, reviewing this case as a test of affiliated investment disclosure, with statutory accounting changes adopted for year-end 2026 filings. So the open question resolves into three concrete weights: whether Delaware approves the $6.5 billion affiliated for unaffiliated swap and any further unwind of the remaining affiliated pool, whether investigators seek charges or a settlement tied to the $17 billion restatement, and whether the $12.5 billion Lakers agreement and a 12% Chelsea stake sale actually close, at what valuation and on what timeline. With all approvals still undisclosed, Like and follow for more stories that matter.